Here are 5 simple strategies that can slash your car insurance premiums by hundreds or even thousands of dollars annually. While most Americans are paying an average of $2,144 per year for full coverage auto insurance in 2025, drivers who understand how to navigate the big 4 insurers, State Farm, Progressive, Geico, and Allstate, plus companies like Liberty Mutual and USAA for military families, are keeping significantly more money in their pockets. If you're like most people, you probably haven't shopped for car insurance in years. You set it up once, maybe adjusted it when you bought a new car, and then forgot about it. But that passive approach is costing you serious money. The insurance landscape has shifted dramatically, and those shifts create opportunities for savvy consumers to save big. Here's what's been happening. Between 2022 and 2024, auto insurance costs surged a brutal 46%. That's not a typo. Nearly half your premium disappeared in just 2 years. The reasons were perfect storm conditions, inflation driving up repair costs, severe weather events flooding hundreds of thousands of vehicles, and an increase in both the frequency and severity of accidents. But something interesting happened in 2025. After 2 years of punishing increases, car insurance prices finally eased for many drivers. The average annual cost of full coverage auto insurance declined 6% nationwide, falling to that $2,144 figure. However, this relief has been uneven. Some states saw massive drops, while others continued climbing, especially in no-fault states like Michigan, Florida, and New York, where personal injury protection requirements drive higher base costs. This volatility creates an environment where the right moves can save you substantial money. Let me show you exactly how to make those moves. Mastering the art of shopping around. This might seem obvious, but the data shows most people aren't doing it. An April 2023 study found that less than half of drivers had shopped for new car insurance in the past 12 months. That's leaving money on the table because car insurance companies can charge wildly different premiums to the same driver with the same car and the same record. Laura Longero, editor-in-chief at careinsurance.com, puts it bluntly, not all insurers rate risk the same way. Rates can vary hundreds of dollars per year for the same driver, so getting quotes from at least 3 companies can help you find the best deal. Here's a real-world example that illustrates the power of switching. One couple's 2025 auto insurance premium was scheduled to jump from $4,983 to $6,374, an eye-popping 27.9% increase. Instead of accepting that increase, they shopped around and switched insurers. Their new premium? $3,694. That's a savings of $2,680 annually. The process is simpler than you think. Get quotes from at least 3 different insurers. Focus on companies with strong AM Best ratings for financial strength and good customer service records. Travelers currently offers the cheapest car insurance for most drivers, with an average annual cost of $1,164 for full coverage. Progressive reports that drivers who switch and save with them save over $900 on average. Liberty Mutual has been aggressively competing for market share with competitive rates for bundled policies. But here's something most people don't realize. You don't have to wait for your policy renewal to switch. You can cancel your current policy and start a new one at any time. Just make sure there's no gap in coverage. Some insiders recommend switching car insurance companies every year to take advantage of rate differences. While that might seem extreme, the data suggests it's smart strategy. Drivers who switched insurers saved an average of $694 per year, according to careinsurance.com, with Consumer Reports, the nonprofit consumer testing organization, finding a median annual savings of $461 for those who switched in the past 5 years. Bundling your policies for maximum savings. Strategy number 2 is bundling your policies for maximum savings. Bundling isn't just insurance company marketing speak. It's one of the most reliable ways to cut your premiums significantly. When you combine auto insurance with homeowners or renters insurance from the same provider, you typically save 15 to 25% on both policies. The numbers are compelling. Progressive reports new customers save more than 20% on average by bundling home and auto insurance. Nationwide offers discounts of up to 15% for bundling those policies. But here's the standout statistic. State Farm customers who bundle save an average of $1,273 annually. That's over $1,000 back in your pocket just for consolidating your insurance. Amica, one of the top-rated insurers in Consumer Reports ratings, offers up to 30% off for bundling home and auto. They also have a unique dividend policy, providing annual kickbacks to policyholders of between 5 and 20%. Don't limit yourself to just auto and home insurance. Some companies will bundle auto with renter's insurance, life insurance, or even pet insurance. The key is making sure the bundled rate actually beats separate policies from different companies. Sometimes unbundled policies from specialized insurers can still beat bundled rates. So do the math. Here's a pro tip. When you're shopping around, always ask for both bundled and individual quotes. This gives you the flexibility to mix and match if one company excels at auto insurance while another dominates home insurance. Strategy number 3 is strategically raising your insurance deductibles. This is one of the fastest ways to lower your premiums, but it requires some financial planning. Most people carry $500 deductibles on comprehensive coverage and collision coverage. By raising these to $1,000, you can typically save 15 to 30% on those portions of your premium. Consumer Reports found that raising your deductible from $500 to $1,000 saves between $509 and $636 annually, representing a 20 to 25% reduction in premium costs. If you're comfortable with even more risk, raising deductibles to $2,000 can provide even greater savings. But here's the smart strategy that most financial advisors recommend. Put your premium savings from higher deductibles into a dedicated savings account. Over time, you'll accumulate enough to cover the deductible if needed, and you'll come out ahead financially. Let's say you save $600 annually by raising your deductible from $500 to $1,000. After just 1 year, you've saved enough to cover the difference. After 2 years, you're $600 ahead. After 5 years, you're $3,000 ahead, even if you had to pay the higher deductible once. This strategy works best if you're a safe driver with a clean record. If you find yourself filing claims frequently, the higher deductibles might not be worth it. But for most drivers, it's essentially self-insuring for smaller amounts while maintaining protection against major losses. As your car ages, collision coverage becomes less valuable. Consumer Reports recommends dropping collision coverage and comprehensive coverage entirely when your premium is more than 10% of the vehicle's value. If your car is worth less than 10 times the annual premium, purchasing these coverages may not be cost-effective. Strategy number 4 is unlocking every possible discount. Insurance companies offer dozens of discounts, but here's the catch. They don't always advertise them clearly, and they definitely don't apply them automatically. You need to ask about every discount you might qualify for. Geico offers the most discounts at 18 different options. Auto Owners provides 12 different types of discounts. But having options doesn't matter if you don't know about them or request them. Safe driver discounts are available if you have a clean driving record, typically offering 10 to 25% savings. Good student discounts can save students with B averages or better 10 to 25%. State Farm's Good Student Discount specifically saves up to 25% when a full-time high school or college student maintains a 3.0 or higher GPA. Military discounts provide up to 15% savings for active duty, retired military, National Guard, or Reserve members. USAA exclusively serves military families and often provides the most comprehensive military discounts in the industry. Multi-car discounts from Geico can save up to 25% when you insure multiple vehicles. Defensive driving course discounts are particularly interesting because they're available to almost anyone willing to invest a few hours. Completing an approved driver safety course can reduce premiums by 5 to 15%, and the course often costs less than your annual savings. Anti-theft device discounts range from 5% to over 20%, depending on the system. If your car has factory-installed anti-theft features, make sure your insurer knows about them. Here's something most people miss. Discounts don't simply add together. They apply sequentially, meaning a 20% discount followed by a 10% discount gives you 28% off, not 30%. Still significant savings, but understanding how the math works matters. The key is having a conversation with your insurance agent or company representative about every possible discount. Come prepared with a list, and don't assume they'll mention everything you qualify for. Strategy number 5 is protecting and improving your credit score. This might be the most powerful strategy on the list, and it's definitely the most overlooked. In 42 states, insurance companies use credit-based insurance scores to determine your rates. The impact isn't small. Poor credit can increase your car insurance premiums by 50 to 100% or more compared to excellent credit for otherwise identical drivers. The statistics are stark. According to the Zebra's analysis of 61 million car insurance rates, drivers with poor credit pay about $2,729 per year for car insurance, while drivers with exceptional credit pay $1,308. That's a difference of $1,421 annually, or 109% more for poor credit. But here's the encouraging news. Drivers can save 17%, or about $355 annually, when they improve their credit score by just one tier. Moving from fair to good credit, or from good to excellent credit, can deliver immediate insurance savings. The reason insurers use credit scores isn't arbitrary. Actuarial data consistently shows that how people manage their finances predicts insurance risk. Those with higher credit scores file fewer claims, while those with lower scores file more claims. To protect and improve your credit for insurance purposes, focus on the fundamentals. Pay all bills on time, as payment history is the largest factor in your credit score. Keep credit balances low relative to your limits. Don't obtain more credit than you need. Check your credit report regularly and have any errors corrected promptly. If you're rebuilding credit, be patient but persistent. Credit improvement takes time, but the insurance savings make it worth the effort. Even small improvements can yield noticeable premium reductions. 4 states, California, Hawaii, Massachusetts, and Michigan, prohibit or limit the use of credit as a rating factor. If you live in one of these states, this strategy won't apply, but you can focus more heavily on the other 4 strategies. Beyond these 5 core strategies, there are additional moves that can reduce your premiums even more. Usage-based telematics insurance programs offer potential savings for consistently safe drivers. The major programs include Progressive Snapshot, State Farm Drive Safe and Save, Allstate DriveWise, and Geico Drive Easy. Progressive's Snapshot program saves drivers an average of $322 annually, while State Farm's Drive Safe and Save offers up to 30% off. However, approach telematics programs with caution. While insurance companies advertise potential savings of 30 to 40%, the reality is more complex. A recent study found that less than a third of drivers enrolled in these programs actually saw their premiums decrease. 24% actually saw increases, and 45% saw no change at all. These programs also collect extensive data about your driving habits, location, and even phone usage while driving. Maryland has found that while telematics programs benefit some people, most enrolled drivers don't see premium savings. For older vehicles, consider dropping comprehensive coverage and collision coverage entirely. If your car's value has depreciated significantly, you might be paying more in premiums than you could recover in a claim. Pay attention to payment methods. Paying your annual premium up front often eliminates monthly fees and sometimes earns additional discounts. Setting up autopay can also reduce costs while ensuring you never miss a payment. Remember that your state requires specific minimum coverages. Every state mandates bodily injury liability and property damage liability coverage, though the minimum amounts vary significantly. Uninsured motorist coverage is required in many states and highly recommended in others, as it protects you when the at-fault driver lacks adequate insurance. These 5 strategies aren't just theoretical. They're proven methods that real drivers are using to save hundreds or thousands of dollars annually. The key is implementing multiple strategies simultaneously. Shop around and compare quotes from State Farm, Progressive, Geico, Allstate, Liberty Mutual, Travelers, and other major insurers. Bundle your policies. Raise your deductibles strategically. Ask for every discount you qualify for. Protect and improve your credit score. Remember Laura Longero's advice. Life changes, and so should your coverage. Your insurance needs and the insurance marketplace are constantly evolving. What made sense 2 years ago might not make sense today. The insurance industry's recent volatility, those massive rate increases followed by the 2025 decline, creates opportunities for informed consumers. Insurers are competing aggressively for good customers, which means better rates for drivers who know how to shop effectively. Start with shopping around, because that often delivers the quickest and largest savings. Then work on the other strategies systematically. Even if each strategy only saves you a modest amount, the cumulative effect can be substantial. With the national average full coverage premium at $2,144 and Americans spending 3.39% of household income on car insurance, these saving strategies aren't just nice to have. They're essential for financial health. Every dollar you save on insurance premiums is a dollar you can invest, save, or spend on things that matter more to you than insurance company profits. The power is in your hands. Use these strategies and keep more of your hard-earned money where